So the market has started to correct, and the yen and gold especially are shining again. In this context, we will first start with the euro. This is the weekly chart of euro-dollar, or the perspective over the next few quarters. As you can see, it is in a bull trend, but it's only a corrective bull with these gray price targets. This correction is deemed to be almost over in terms of timing, and prices haven't really made a strong foray to the upside. We believe that we've entered a zone of risk again here, and we're waiting for the prices to resume their downtrend. Focusing on the daily, or the perspective over the next few months, we could see that this consolidation may have already started. And we are now in a corrective down mood, which could lead us down to the higher 110s, down to possibly 108 over the next month or so. Below 108, we would need to watch out, because this would mean that we would have a long-term resummation of the downtrend. The 108 will also serve as support in this move down. Focusing on the hourly, in this corrective move down, we've had a reaction up. This correction up is deemed to be over or done, and we are attempting to resume the downtrend. It is not yet the case, but it would be our favorite scenario as long as we don't make it back above 113.74 to possibly create an impulsive move up. But at the moment, corrective up done and resume downtrend. To summarize it, a long-term very weak uptrend, which is corrective and possibly over. The daily is resuming its downtrend. It's first corrective, and the first target zone is between 108 and 110.70. The hourly had a reaction up at the beginning of June, but is now dying out and attempting to resume the downtrend. Moving on to dollar-yen, the picture is clearer. Dollar-yen is really reacting here as a very defensive asset. We can see that it's been correcting down since the second quarter last year, and it has made its whole way down to its corrective targets. We are now well within these corrective targets down, and seeing strong support around the 103 level. If we were to pass below 103, we could then expect an impulsive move down and a much stronger move down on dollar-yen. But at the moment, we believe that these levels are probably where we're going to find the next support. On the daily, we're also still in a downtrend, and it has pretty much reached its objectives, impulsive down done. Now, if we put it into the perspective of the weekly, which we just saw, there's possibly a bit more to go. At the moment, we could confirm this because our risk index is not yet oversold. So although this impulsive down move is possibly pretty much done, there could still be a few more figures to go. This is what we see here on the hourly chart, or the perspective over the next few weeks. We could see that this downtrend doesn't seem quite over yet, could lead us down below 106, but possibly down to 104, and that the risk index is still pretty much in the middle of the range and has not reached the oversold zone. So there's more potential in this downtrend at the moment. Looking at the three frequencies together, we have three bears, and so a potential continuous downtrend on dollar-yen for now. Similarly, another defensive asset, gold. Gold is correcting up, and this correction up doesn't seem quite over. It would find its targets in between 1277, we're pretty much there, up to 114. If we look at the daily chart, we could see this move up, which doesn't seem to be quite over yet. Our impulsive targets lead us pretty much at current levels, but possibly up to above 1300, up to 1359. So we believe this move up, which is a defensive move, doesn't seem quite over yet. It can extend over the next few months. The risk index is not quite overbought yet, so there would be the potential to create this move. The hourly is also moving up pretty strongly. The risk index is still in the middle of the range, and it still sees targets over the next 2 weeks, which could extend above 1300. So with three bulls at the moment, this defensive play still seems to be moving up in a potential continuous uptrend. Finally, on equity markets, well, we've reached our long-term targets and we've seen a lot of work since the second quarter last year. We've imagined that at some point we could break out from this range, but shorter term, we do seem to be in some exaggeration with both our envelopes touching each other. If we look at the daily or the perspective over the next few months, it does seem that the move is not quite over yet and it could lead us up to 2200, possibly 2300. That said, you could also see the exaggeration here on the envelopes as well as the risk index in the overbought. So it might be the good time to enter into an intermediate correction. This intermediate correction could take us down over the next few weeks. Finally, on the hourly, we could also see some exaggerations here. The price has started to turn down. We would expect our indicators to move in corrective down closely. At the moment, they slow slightly hanging up to an uptrend. Yet the targets have pretty much been reached in the last tops that we saw last week. So, long-term consolidation, looking for a breakout, but with some short-term exaggeration at the moment. Medium term, still moving up, but an intermediate correction that could lead into some consolidation over the next few weeks. And the shorter term, still hanging up to an uptrend, but seems to be slowly turning down to begin this consolidation. Thank you very much. That's all for this week.